Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking a little bit about GDP and what that might actually look like after the Liberation Day on all the Trump tariffs going into effect today. But we're also going to be talking about NFP. Remember, it's really going to be an interesting few weeks, and I'm going to go ahead and go over our schedule. We got some trade ideas that we need to go ahead and review. Good to see everybody back in the room. Hamey, good to see you. Bobby Bob, good to see you. Mark Corp. Okay, Coach, let's go. Yeah, let's dive in and see if we can't get after some price action. We do have some trade updates, some interesting stuff going on really across all asset classes. Today we're gonna talk Forex, we're gonna talk commodities, we're gonna talk crypto. We're also gonna talk a little bit about Tesla. I think Tesla's on the verge of giving us a buy signal that we sort of have been talking about on that 920 EMA daily for quite some time now. So if there's any markets that you want to look at, be sure to drop them into the live chats. I'm not necessarily sure. It looks to me like our live chat on YouTube's working, but we've had some big time problems with that. So you definitely just sort of stay tuned there. If you're writing in and you're not getting through, you're probably just going to get a situation where we just don't have a good live chat. So something to look at there. Let me see. Yes, sir. Good to see you. Hey. Good to see everybody back. Okay, guys, let's go ahead and get after it. We got a lot to go over. WTI, absolutely, Bobby. We had a huge build in WTI supplies today, but we're seeing some inversion in price action. Right now you have bullish crude oil, and you've got bullish crude oil because we're talking trade wars, we're talking tariffs, and we just don't know what Trump's going to say at 4 p.m. Eastern. We just don't know. But the announcements are going to come from the Rose Garden. They're going to announce all of the official plans for Liberation Day. So, I'm not going to sit here and pretend to know what any of this means. I'm not. I think that right now our stocks are rallying. We're seeing some bullish price action, but I don't know that that's going to hold. I think you're going to be in for a bit of a rocky road once these tariffs go into effect. But U.S. equities, the markets are supposed to crash because of tariffs, and it's not happening. It's not happening right now. So we're going to have to stay tuned for exactly what I think is going to be a blockbuster 2 weeks. We're going to be out on vacation. We'll go over that towards the end of the stream, but I'm going to be out for a while, but then I'm going to be back on the 14th of April, just before tax day. I don't know if anybody else paid their taxes, but that hurt. That's for sure. But let's get to it. Let's just go ahead and start with a trade follow-up. All right, we got a trade follow-up here. A pretty darn good trade here in the Euro Great Britain Pound, one that I'm happy with. I'm very, very happy with. We had an opportunity to bid a long-term 62% level, and it cashed in relatively easily. We had 27 bids, and you can see that low came down about 83.15, and then we got the big bounce back up towards 83.80, 83.75, 83.80. So this was a good trade. This is a slam dunk winner. We took about an 8-tick draw, and then price just jumped right back for us within a couple days. So it was a nice swing trade. I love these long-term macro levels. They work really, really well. That one in the Euro Great Britain Pound, that's fantastic stuff. So I was very happy with that trade idea. I thought it was a rock solid trade idea, and one that potentially was just a way to get some money without much stress. And that's really what it's all about. Okay, Switch Markets. Remember, if you want to trade any of these actionable trade ideas, check out switchmarkets.com. They've also got free access to the algobuilder.com with a funded account. You're going to want to check that out. We're going to be talking more and more about Algo Builder as the year goes on, so you're definitely going to want to stay tuned there. If you're in the United States, I got this question yesterday. If you're in the U.S., Switch Markets will not be able to service you. You're going to have to check out one of our other affiliate brokers in Owanda. I typically point people towards Owanda. I have an account with Owanda. I have one with Forex.com. So if you're interested in OTC markets, you can do that. If not, if you're going to trade futures, let me know, and I'll be sure to give you a little bit of input on where you can lay off some action in the futures markets. Okay, another trade follow-up, buying Dogecoin at market. This price isn't exact. I had to list a price yesterday that was going to get us into the market because I wanted to buy yesterday. And as of yet, not much has happened. Now you can see that we're bidding market, and we're somewhere down around, 1750 would have been our entry. I really like this long-term support zone. That 78% level, that's a pretty darn good bounce. So right around 16 cents, something like that. I think you're going to have a pretty good chance to make a few bucks. So 16, I think we bought, what did we buy? 17s, 1750s. Something like that. I'm not too worried about it. I think you got a good chance there to make a few bucks. So I'm loving Dogecoin to the top side. I like this play to be able to get in and sort of bid this zone here, right around this support zone, and maybe get a retracement back up to that 22 level, maybe even somewhere up around 20. Either way, it's a pretty darn good little payoff there, especially if you're interested in trading crypto and cheap crypto. A lot of us really like the cheap cryptos because you can flip your money. I mean, take a look at where Dogecoin's been over the last few months. That was back in November, right after the election win. We pretty much figured that Dogecoin was going to at least hold in this zone. It hasn't. It's been a steady downtrend like it has in Tesla, but we're starting to see some of the things that are really facing these assets politically are going to be changing. We had Musk announce that he's going to be leaving Doge here in about another 100 days, and that's going to get him out of the political spotlight, which is something that I think is something that the Tesla shareholders really want, because it's been a rough ride for Tesla and it's been a rough ride for Dogecoin. So definitely a nice big pullback, but I still like Doge. I don't think the fundamentals have changed. I think you're going to see deregulation and an opportunity really to potentially pick up a big-time rally on Doge. And this 78% level, I absolutely love it. If, in fact, we do break south, then we'll be looking to bid down in here, and I'll probably be getting involved with my own stack of greenbacks, and I'm probably going to be switching them for Doge down there around 10 cents. I see that as being a pretty darn good trade, one that we could easily get a pop up to 35 or 40. You could get that pop anytime. So I'm watching this close. I love 78%, sort of the last bastion, the last line in the sand, and I think that we're going to have a chance there to make a little bit of money. So I'm excited about that as well. So staying on sort of the political theme today, Tesla's another one. Now, remember, I don't really care what anybody thinks about this. It doesn't matter what I think about politics. It doesn't matter what you think about politics. We're traders, and we're trying to find things that are discounted. And what we've seen, especially in Tesla stock, is we've seen major hit campaigns out of your mainstream media outlets. We've also seen some big-time shorting coming out of some of the institutional exchanges and activist investors. So what that's done is that's driven Tesla. You've seen really a massive fall in price in Tesla going back, realistically, back to this, I would say mid-January, right before the inauguration. Since Inauguration Day, it's been all downhill for Tesla. So the real question is Tesla overbought or oversold right now? Well, take a look. Right back there in October, then you saw the big gap up on the election day. Tesla got a tremendous rally right here. Got a tremendous rally on the election, and the reason why was because you had really a situation where they knew Musk was going to be positioned close to the administration, and that was going to be of benefit. That was going to bear a little bit of fruit, whether it was in some sort of maybe potentially tax breaks, maybe the access to rare earth minerals, maybe all sorts of different contracts that the governments can award. So we really thought that Tesla was going very, very high, and it is. Right up there, though, you're around 480, giving back a lot of that. I mean, you're back down to around 279, but for me, I really like the opportunity maybe to bid Tesla from pre-election levels, especially if we get a nice technical signal. So RSI confirmation, you'll see our RSI plunged into oversold territory back on the 10th of March, and then we got the big break right here where we're looking for that crossover to develop, the 9 to cross up over the 20 and give us that buy signal. So I would definitely have that on my radar if I'm a stock trader. Many of you trade CFD stocks. That's going to be a bit of a challenge because of your leverage, the applied leverage. What you're going to need to do, if in fact we get this crossover, it looks like we may get it today, we may get it tomorrow. There's a couple places I'd be looking for my stop loss. That would be my first stop right underneath that swing low. And then potentially, if you wanted to be more aggressive, you could put it underneath this swing low right here. I believe that you're going to get a pretty good rally, though, to finish the day out. We're at about a 4.75%. Big move for Tesla. And I think if we get up in this neighborhood right here, you will get that 920 crossover, and that's going to be a signal to buy the market. To buy, and then buy some more. So I'm interested in Tesla. We covered Doge. We're already long Doge from this key level. Tesla, and then our Euro Great Britain pound was a pretty darn good trade right there. I really like the diversity of those holdings, even though two of them are sort of related to Elon Musk. All right, everybody. There's a lot going on right now, so I'm just going to hop right to it. Let's get into some of these markets. We've got a weekly petroleum report that's significant. We're going to have to cover U.S. oil. We've also got to talk some gold. It's absolutely important that we talk gold, but our commodities discussion is going to be sort of a lengthy one. So if you have any other commodities you'd like to look at, I'm going to try to look at silver as well. They're all on the move. So today's Liberation Day. Remember, we had the RBA interest rate decision that came across the board a few days ago. The RBA didn't do much, and what you saw what you saw was really sort of a nothing burger. We saw a little bit of a saber rattling out of the RBA, but they did move interest rates, and nobody really got in there and dove in with both feet with any conviction. So I would say that turned out to be a nothing burger. But Liberation Day today is sort of an unprecedented day. Now, it's sort of I think it's a pretty dramatic name, but I mean, leave it to Trump and in the Trump White House to sort of, let's give it let's market this thing. Liberation Day. Okay, whatever. The bottom line is this. We have a list of reciprocal tariffs that are going to go into effect today from the United States against many of the trade partners, and essentially it's against the dirty 15. There's 10 to 15 countries that the United States does a lot of business with, where those tariffs, and also there's other barriers to entry there, all sorts of different fees and different costs of doing business or selling U.S. goods in those countries. Today at 4 p.m. Eastern in the Rose Garden, Trump's going to announce what he's going to do. And some of the reports coming out of there are pretty big. There are going to be some pretty big tariffs on people. We've heard upwards of 70%. I believe right now why we're rallying in WTI crude oil is because we think there may be a tariff headed towards a big oil-producing country that's not necessarily playing ball or, I won't say playing ball because we're talking about business as it's been for a long, long time here in the United States. Just sort of we've grown accustomed to running a trade balance, a negative trade balance, a trade deficit, and they're going to try to change that. I don't know that it can be changed. I don't know. We're going to find out. But today, expect some real fireworks for Liberation Day, and Trump's going to give a big presser out there, and God only knows what he's going to say. He says whatever he wants. But we do have our weekly jobless claims tomorrow, and we also have U.S. NFP coming right up. So what I want to cover right now is sort of the gold market, and then we're going to get to U.S. oil. But the gold market is something that is absolutely – it's not just up. I mean, it's absolutely exploded in the last 24 months, the last 15 months since January of 2024. You've seen an absolute explosion. And I was doing some research this morning, and one of the bond king, one of the big fund managers, and one of the really the honchos on Wall Street, Jeffrey Gundlach, was saying that, listen, they expect, because of this compression right around 1,800, they expect to print the 4,000. Now, maybe not this year, but over the intermediate term, they expect to test a 4,000. There's no reason to believe that you're not going to get that this year. Take a look at this trajectory. You're up big already. We could see a major, major breakout. Now, why I bring this up is because Gundlach's one of the smartest guys in the world. That's what they say. He's a true genius, all this stuff, knows how to work the bond market with maximum efficacy. Okay, that's great. As a fund manager, produced incredible returns. All right, that's great too. But as traders, if you followed any of these live streams, we have been very, very vocal about what we thought was going to happen to gold. And we knew exactly where the soft spots of this thing were, and we also knew what could happen if those soft spots break open. And what I mean by that is we were on that high, that all-time high right there at 1920. We were talking about that for seemingly ever, all right, seemingly ever. But realistically, right in here, this is pretty much when I started. When did I start in 2021 here? Something like that, 2022. I don't recall, but I did know this. We had an all-time high right up around 2075. We had another all-time high and a test of 2070. This area between 1800 and 2070. We knew once 2000 broke, we knew that we were going not just a little bit high, but a lot high. We sort of had some consolidation right around 2500, not much though. And then we went up to 3000, had some consolidation there, and we broke. So to me, I take a look at this and I'd say, 3130, and we're catching steam. You got active wars. You got kinetic exchanges going on between Russia and Ukraine. There's no peace there yet. We're talking about inflation. We're talking about rate cuts. How high could gold go? I think that Marquardt pointed it out yesterday. What should we be looking to do? I think that we could definitely scalp in front of 3250. I'm going to pull that game plan up here in a minute. But be ready for anything on this break. Now, the last thing I'm going to show you, believe me, these people are master strategists. They're hedge fund managers, and it boiled down to this. The guy pulled up a chart, he looked at it, he said, okay, well, that was a test, and then we pulled back, and then we tested it for a couple of years, and then we finally broke. So the idea is being the longer that you get compressed and consolidate around a key level, once you break, the further you go. And Gundlach's absolutely right about that. What markets do is they coil up, and they have pressure. There's pressure between buyers and sellers. And the longer that stuff lasts, the more measured the move is and the bigger the move. There's no question that you're seeing a repricing of the gold market. I remember back here, I mean, I don't want to play the I remember game, but I was there in January of 2011 when everybody in the world was buying gold. They said gold's going to 3,000, gold's going to 3,000. Were they wrong? No, but it took 15 years. So the road from 3,100 to 4,000 is going to be a hell of a lot shorter than it was from 2,000 to 3,000. I would bet on that. I really would bet on that. So it's not going to take you 5 years to rally from a test right there of 2075 up to 3,000. It's not going to take 5 years to do that. What it did take was something like COVID, something like unlimited quantitative easing. That's the reason why your gold is absolutely broken out. Now, he's one of the smartest traders in the world, one of the biggest fund managers in the world, and I think that everybody watching this stream can see that rationale. So what I want you guys to do, remember, when you're watching CNBC or you're watching Bloomberg or you're watching, the Asia market preview, if you're watching anything and these guys come out, these ladies and gentlemen come out and they're wearing the $3,000 suits and they're polished and they have great, they're wearing the real expensive spectacles, not just the glasses for seeing, but the real expensive ones that are trendy. Just remember that they're putting off an aura, they're putting off an image. They want you to believe not just in what they say, but they want you to believe in them because that's their business. Some of the best traders of the world wear sweatshirts and slippers. You don't have to be supposedly the brilliant people of the world to understand how a market works. Everybody watching this live stream can understand what I just said. Compression around 2,000 and a break. Last thing I'm going to say about gold, and then we're going to get into some trade ideas, is this. A lot of folks love chart patterns. Matter of fact, our academy inside of the trading room has a lot of information on chart patterns. This is a yearly chart, 12 months. It's a cup with a handle. Cup with a handle. Pure and simple. Let me see. Joshua Chung. Hello, Shane. I'm in a remote area in Southeast Asia. Well, welcome, Joshua. Welcome to the room. Welcome to the live stream. I think it's great. It's one of the great things about the internet and the connectivity is you can join it from anywhere. I'm from southwestern Montana, rural area in southwestern Montana. It's still snowing here. That's absolutely fantastic. I hope that you're in a great area. I hope that everything worked out well with your with earthquake in Myanmar. So if you're in that region, I hope it found you well. Your outload, just go ahead and watch it later. I will, Joshua. Thank you. In any case, right here, you've got a nice cup with a handle right there. Boom. There's your break. There's your break. There's your break. It's a textbook cup with handle, and that's why people believe in chart patterns right there, because when you have a yearly chart pattern cup and handle, you don't have to be Jeffrey Gunlack to understand once you break, you're going high. Okay, so all that's great. Historical stuff's great. I could talk about that all day long. We talk about the whys and the whats. But let's talk about exactly what's happening here today. 30-minute chart spot gold. It's ugly. We had some news events out earlier today. That's the opening bell, ding, ding. We had some news events. We had some interest rate stuff earlier this morning I'm going to cover. And then you had a lot of compression. This type of chart is unbelievably difficult to trade. Really choppy, really choppy. So as clean as that yearly chart looks, this is why most of the Gunlacks of the world, they don't trade. They don't trade on 30-minute time frames. They're looking at yearly charts, weekly charts, and monthlies. Well, that's great. We have absolute compression here. I don't know if this market's going to break positive or negative before the close. I have absolutely no idea. Absolutely no idea at all. So be very careful if you're trading gold. Now, if you're going to look to make a trade, make a play, and you want to get in on the market, first thing I would say is you're definitely – you notice we pulled all of our indicators off. We're just looking at price action. All right, well, I mean, we got RSI down there, but I'm not too worried about RSI, not when we're trending like this. So what do we have here? We're going to have an opportunity eventually to buy a pullback. Markets don't move in straight lines, okay? But where's our entry? 30-30, beautiful. If we get a sell-off today on tariff news or NFP, Friday NFP, definitely have to bid right there. 30-30, 30 and a quarter. That's a heavy bid. We want any opportunity to buy on a weekly time frame. That's what you want. But look at what happened right here. Right in front of 3,000, we had 3-week compression, and then we finally broke. And once we broke out of that sort of that big P, that bullish flag, nice bullish pennant, boom. So we are off to the races here. Let's go to a daily chart and see what we have. All right. Now, this always happens typically right before I go on vacation. There's no question about it. Daily chart. Another big bullish pennant right there. Bang. Nice big breakout. Look at the compression right around 3,000. Remember us buying in front of 3,000? Or excuse me, on the back side? That was absolutely wonderful support. I would love to buy it again. I mean, I would be buying that heavily. But you're not necessarily going to get that pullback just yet. I think that gold is probably going to take off. I don't really see any way around that. Right there, 30.91. Pretty much any excuse to buy a retracement level at this point is what I would be doing with gold. Now, we could go to a 4-hour chart as well and get more and more aggressive. I don't have any problem with that, but I would avoid it. I would avoid it right now. You can see this is very choppy. This is sort of compression, turning into sort of a flag formation. What you want to do here is just a daily. Nice daily chart. Spike low, spike high, pull back 30.91. Probably buying 30.95s. If you want to be aggressive, you could do that. 30.92.50 is probably an absolute optimal entry point. So I definitely am a big fan of gold right now. I think it would be silly not to be. It'd be silly not to be. All right, let's talk about a little bit of oil. Crude oil. Today was the big WTI inventories day, and we're starting to see things develop here on the business front that are you're seeing some green shoots with regard to Trump policy. One of the biggest parts of his policy was he wanted to boost oil production. That was it. That was pretty much the crux of the economic argument. The idea was, I'm going to get energy prices down. That's going to cut our inflation in a big, big way. In order to do that, you have to produce. And we're producing. I mean, there's no argument about that. Right here, check it out. Here's today's EIA inventories. Always go to the third paragraph of this release. You just go to the EIA.gov, click on the summary, and you're there. The third paragraph is what we want to know. That's what we want to know right there. All right, let's go ahead and have a look. U.S. commercial crude oil inventories, excluding those in the SPR, increased by 6.2 million barrels from the previous week. At 439.8 million barrels, U.S. crude oil inventories are about 4% below the 5-year average. Okay, so we're still running a pretty good deficit, but that's a market increase. 6.2 million barrels. Remember, last week we sort of faded a little bit. We had a negative read on WTI crude inventories. Now you have a positive read. So theoretically, that's going to either bring sellers to the market or it's going to put a sort of an artificial ceiling on the market. Now, 6.2, it may not sound like the biggest move in the world or the biggest supply build in the world, but we were down 5% below the 5-year average. That 6.2 is one of the bigger numbers we've seen in quite a while. If you start to see weekly figures start coming in, 6, 7, 8, 10 million barrel build, if that happens, and a lot of us think that it will happen, you're going to see WTI crude oil, if nothing else, have a top put on it. Now, I'm still bearish WTI, but we're printing 71.64 right now, and the reason why we're doing that is tariffs and geopolitical uncertainty. So let's go ahead and get to it. That is a major, major bearish read from that oil number, but because of the tariffs, you can't really price those like we would normally price them. We don't know what's going to happen today. All right. 71.36 was a fascinating level right there. This is your U.S. oil weekly chart. We sort of had a spike high here, and we've had these outlines. We had an absolutely great trading, great short-term scalping in front of 69.03. Let's go here and see what happened at 71.36. We don't need a minute chart. We need a daily chart. Fantastic. You had a little bit of compression here, sort of an inverted hammer. That would be one of those where I would say, man, that's typically a reversal signal, especially with a key level, a longer-term key level. Let's take this down to, say, a 30-minute chart and see exactly what's happened at 71.36. Okay, right here, went up, sort of steamrolled right through that. Didn't get much action at all there on the 31st, but it's sort of holding up right now is an area of long-term sort of resistance. It's just not that clean. There was your spike high at 72.06, so you took about a 60-pip draw right here. This was some pretty darn good trading right there. You got that open right out that U.S. Open, opening bell ding-ding sort of rally. Nice hit right up there to 71.35 and then a pullback, and then you got some compression and you broke. Right now, I would be inclined to take the short side of this market. Now, if you wanted to scalp, you could wait for a pullback and buy right there. I just wouldn't do it, and I wouldn't do it because of the tariff talks later today. We know there are going to be some tariffs put on the energy producing countries. We know it. The question is how big are those oil tariffs going to be? So for right now, if I'm going to trade the rest of the U.S. session, the U.S. crude oil session, about an hour, I'm going to have to do something like this. That area right in there would be my bid zone. I'd be looking to bid that area, that's 71.35. I'd be looking to scalp it for probably 10 to 15 ticks. That would be my game plan. Now, if I want to take a position trade, okay, Shane, what do you want to do? Take a position? I would be considering taking a short position here. Now, it's tough because if, in fact, we wanted to take this trade, our daily top right up there is about 71.87. Okay, so 71.87 to 71.90, that's going to be an area that we're going to have to respect because there's absolutely no law, there's no rules saying how high this thing can go. And I want everybody to understand that. I mean, listen, if we take a short right here and this market breaks against us later today on the tariff news, we could easily go to 73, easily. And then hit the next port of call, which is that long-term 78% retracement, which is an absolute great trade. So if, in fact, a person wanted to take this trade, we've got the macro levels. Do we want to go long or short? I would go long on a pullback down there at about 71.35, maybe 36, 37. I think that's going to be a pretty good trade just because you're going to get buyers and sellers there. If I wanted to take a position short, should we take a shot at it? If I'm going to take this trade, I got to have discipline. This is no joke. I mean, we're up about, 0.9%. We're going against some pretty stiff fundamentals and uncertainty coming our way during that tariff announcement. If I'm going to send them short, I've got to be real sure about what I'm doing. What does that mean? Okay, if we just sold, I've got to get out right up there. I mean, I've got to get out. Shaded a few pips, and then you scratch, you just rip the Band-Aid off, and you go home. And right now it's sort of running against us. Now, where could my profit target be legitimately? It could be back down at that 35 level, 37, maybe 38. So if I was to take this trade, and we're getting hit right now, no question about it. We're fighting an intraday trend. We're hoping that this kind of compression leads to a pullback to our key level, 71.38. But if, in fact, we take that trade, is it worth our time? Well, we sold 71.71s. Okay, so down to 38 is what, about 33 pips? All right, so if we're looking to get 33 pips, and what are we risking? 71 up to 90, we're risking about 19 pips. So we're looking at about a 1 to 2 risk versus reward. Is that a great trade? I'm going to shade that up to 91. It's an okay trade. It's a high risk trade because we are fighting pressure and we do have the big announcement coming. If we're going to lose it, I just as soon lose it, and then we'll get back after our different trade idea right here. So if I was looking at this and I'd say, okay, what's a high probability entry? That's a gamble. No two ways about it. I don't think we're out of it just yet, but it doesn't look good. We're fighting a trend. That's trouble. What's a better trade? Selling right up in front of 73, 72.94s. That's a pretty good look. So we're going to stick a pin in this U.S. oil and see what happens here. But right now it doesn't look that great. Here's our 1 minute chart. You can see right there we sort of bought where we sold in, and now you can see this thing really rolling against us north. This is going to be a tough one. It's going to be a tough one to win. Right now we're down about 9 ticks. I don't feel very good at all about it, but we got a little bit of time left. Now here's the thing: when you take a trade like that and you put the money down, you know where your stop loss has to be, and you know where your profit target needs to be. You almost need to let this thing roll and pan out. Right now, I hate the way the price action looks. I absolutely hate it. But, if the market reverses and comes our way, we'll have a chance to be successful. The real question is can we hang in there until maybe we get some good news on the tariffs? That's tough. This is high-risk trading, guys. I'm not necessarily a big fan of this. Let me say, Issa, welcome. Issa, hello, Shane. I'm watching from Nigeria. Well, welcome. Welcome, everybody, one and all, no matter where you're at in the world. That's fantastic. It's always good to see just how far our reach is, and I love talking with you traders that are from all parts of the world. No doubt about it. Everybody sees the markets a little bit differently. May all your trades come up aces, that's for sure. All right, we got a couple other things here to cover today, and we're running a little bit long, but that's all right. As far as the markets, I mean, this is it. Live updates, makes final decision on reciprocal. Nobody really knows what's going to happen yet. Tesla reports 336 vehicle. We talked Tesla. There you go. Elon Musk will leave administration in coming months. Everybody already knew that. He had a 130-day contract with the feds to run Doge. That's no surprise. So we got a lot of stuff happening here that's not necessarily a surprise to us. What I do want to cover, we had a few economic news events here that nobody talks about. It's important that we understand exactly what's happening with our interest rates. Interest rates sort of held firm. All right, right around 6.7 week over week. That's not really much of a move. Applications fell. The interest rates are still pretty high compared to the last decade. But when you come down here, you take a look at ADP, non-farm employment change, 155,000. That's a pretty good level. I mean, that was much more than was expected. And you almost doubled up the previous release. Many of those jobs were in manufacturing, which is exactly what the Trump administration wants to do. So today was a pretty darn good news day for the Trump administration. You got a big build in WTI crude. You had a pretty good build in manufacturing jobs. And it remains to be seen what's going to happen. But, these tariffs are going to be the next piece of the puzzle. Will they work? Won't they work? We don't know. All right, our gold trade's coming, our oil trade's coming back down to where it needs to come to. Let's see if we get any help there. Who knows? Anything can happen, especially when you're talking WTI crude oil. It's the Wild West of trading. I've been trading a long time. Let me see. The Artful Baker. Good to see Art. The Artful Baker. Clever. I like that name. I'm in Illinois. Well, welcome. Welcome. Let's see. I haven't been out to Chicagoland in years and years. But if you're in that region, let me see. I'm trying to think of my family. My grandparents had a place out of Springfield, Illinois. Back in the old day, my great-grandparents, they farmed out in Springfield, Illinois. It's just south of there. So welcome. Good to see you. All right, guys, let's take a look at a few more markets here. This oil trade's starting to pan out. I'm starting to like what I see there. Let's go ahead and see what else we can see here. Tesla, that's going to be a good one. That's going to be a bid here relatively soon. Doge isn't really doing much for me at this point. This Euro Great Britain pound, this was a pretty good trade. All right, let's go ahead and take a look at a few of our majors and see exactly where we're at with regards to our Great Britain pound USD, something like that. Let's go to our monthly chart. Monthlies and weeklies, I love those. Those are fantastic on the Forex pairs. I love my macro levels. This one's interesting. The next port of call, let's see, we're at 129.78. So if I'm trading the Great Britain pound USD going into NFP on Friday, I'm definitely mindful of that zone, that 130-150 level. Probably look to short right in front of there, anywhere from 130 and a quarter up to 131 or 131 and a quarter to 130-150. That's a pretty good zone up there. I like that one a lot. I think that you're going to have pretty good success selling there. This was a nice checkup, 129 and a quarter. We saw a nice early April sell-off down to about 128.79. So that scalp was pretty good as well. So that's what I would be looking to do. Let's see, Artful. Yep, in Chicagoland. Well, welcome. That's for sure. Let me see him on the Dow and the Nas. Yeah, we're going to look at stocks here in just a second. There's one last thing I want to look at here with the U.S. dollar, Canadian dollar. Canada, there's been a lot of trash talking going back and forth between the United States and Canada over the last few months. You've also got a snap election coming up in Canada, and what we're seeing is a really strong support zone. We've been all over this 38% zone for a long time now, and this one's held up 1, 2, 3 times, 3 months in a row. My guess is we go down and test it out again. We're trading 143.15, 142.68. You probably could be looking to scalp one more time from 142.75, looking for 25 pips, 15 to 25 to 30. But just remember, the big thing in these markets, we just covered it with that gold market. When you see compression like this for like 60 days, and we do, in fact, break beneath last month's low, then we're going a lot lower. No question about it. We're going a lot lower. Be careful there if you're trading that. That could be a tough one. All right, let's take a look at the Dow and the see, we're not getting any love at all out of Dogecoin. That's too bad. All right, let's take a look at US 100. All right, I mean, this is it. This is sort of what I was saying about this level, this 19,000 level. We had a big washout. I didn't actually put that on the trade updates, but we caught that washout underneath that previous March low. Once we took out that 19 level, we fell away that extra 250 points relatively quickly, and that was a really, really nice short trade. Now we're getting the bounce. And, honestly, when we broke beneath that zone, I figured we were going to 18.3, somewhere down in there. We are back, and we're bouncing early. We're up 2% on this early April trade. What I would be looking for, we're up about 1% today. I would be careful with this. The tariffs can absolutely kill this rally. The biggest number right now is March's low, 18,790. So if you do get a shot underneath 18,790, you're going to 18,364. There's not much question about it. And then if we can't do business at 78%, we're going to make a run and maybe start cutting in to these to this rally down in here, which I think everybody sort of expects by the end of the summer. I know I expect it. I expect a major correction. I don't think the pain's over for U.S. stocks. If, in fact, you were interested in trading the E-mini NASDAQ futures intraday, this is a pretty easy one, but you got to time this one quick. You have to be quick about this because once we start talking tariffs towards the end of the day, this is going to get very, very ugly. So if you're trading E-mini NASDAQ futures there, so CME, let's say you're juiced into the CME group data, which is where you'd be trading this, 19,670. So something like that would be your 30-minute scalp. You've got a nice, beautiful, big, really just a big up day. Opening bell, ding, ding. There's your rally. Now you're rocking. So you're looking right there potentially to get that bid in right around 1960.75. So if I was looking at doing that, I would go ahead and just and these are paper trades. Are other trades still in the red? But we have a fighting chance on that one. There's something like this. No, you can't shade it that much. It's got to be right. Yeah, probably just right in there. Maybe shade at 2 points, about 8 ticks. So something right in there, maybe 72 and a quarter, 72.50. That could be pretty good. That's a large distance. But remember, that E-mini NASDAQ, that thing doesn't just move, it rips. It absolutely rips. So that's potentially a pretty good little late day scalp there. Just remember, right around the market close, you don't want any part of these markets about 10 minutes before, even a half. Today, probably even during power hour, a half hour before you're going to run into trouble with heavy volatility. You can almost guarantee that. All right. Take a look at the last one. Take a look at the Dow. Let's take a look at Dow futures. US 30, and then we'll look at the E-mini Dow. We did pretty well on this market. This is one of those that you sit here and you go, okay, how hard does technical analysis have to be? It doesn't have to be hard. It doesn't have to be hard. We run on our How to Trade Com YouTube channel. For those of you that haven't seen it, we put out like a different strategy, it seems, every week. And I get a lot of people saying, Shane, you don't trade all these profitably. No, I don't. No, I don't. I don't trade them all. But all of them have their merit and all of them have value. You can trade them all profitably. It can be done. You just have to find which ones really resonate or make sense to you. That's what trading is all about. For me, key numbers have always meant everything. And that goes back to when I was going to cattle auctions with my dad. And we would sit there and I would listen to the auctioneer. I can't do an auctioneer impression, but they would sit there and they would be pointing in the stands. And it would be funny because you'd always notice there was more bidders at key levels. So that's why the auctioneer, if you were bidding on cows and, went from 91, 92, 93, can I hear 94, 95? Once it got to 95, you saw a flurry of action. You either saw a bunch of bidders step in and drive it to 100, or you saw everybody sit on their hands. But it didn't matter. Everybody was doing something. So my trading, approach, my mentality goes back to those round numbers. I always value round numbers. That's just me. You don't have to. But to me, that makes sense, and that's how I want to trade. Is I want to have no inner conflict. If I'm conflicted, I'm in big, big trouble. I need to be really, really flexible and positive with my trades. And when we talk about this type of a thing, this is a chart that I put out a long time ago. Right in here, we put it out in basically January. And I said, this game is real simple. If we break above 45, then we're bullish and we're rocking high and we're going to go very high. If you can't break above 45 and you sort of get stuck in the mud and the bears control the action, that means that the short-term sellers withstood the battle. Pulled back in a big way. And you can see right there from that spike low back in August of 2024, back during the carry trade meltdown, this pull off here, 62%, right around 40,948. That's the bottom of this market. Happened last month. I would say the same exact thing as I said about the US 100. If we break beneath that level, March's low, we're going low. We're going very low, at least to 39. More than likely, that won't hold either. The entire uptrend of the last 18 months is going to come into question. Guys like Jeffrey Gunlack, what do you think they're going to do when they get a test of that order block down there? Are they going to buy it? Maybe. Could wait for a deeper pullback, maybe 34,000. That's a big pullback. But put yourself, in sort of a broader perspective. If you come off of a 45 high to a 35, it's 10,000 points. What does that equate to? 10,000 divided by 45, right? Do the quick math. It's only a 22% deal. It's a major correction, but it's not unheard of. So if I'm a bargain hunter, I'm not buying the US 30 yet. I think this market could really fall apart. That being said, if in fact you break above, you get us sort of back framed up nice. And if you break above that 45, which eventually, most of us believe is going to happen, then you're going to 50. Just depends on how long you're in the market for. Something to think about there if you're interested in the US 30. As far as my intraday trading, if I was going to be trading the US 30, see, this is coming right to us. Let's pull up this E-mini Dow. See the market structure. The market structure is different. It's not just a breakaway trend. You had a pullback right here before you made the next leg up. So what kind of trade is this? A highly risky trade. You're pulling back. You've got sort of an Elliott wave formation right here, which is, sort of a 1, a 2, a 3. Is this the beginning of a 4? This order block right down here looks pretty good, though. Could we get it? 42,004, somewhere right in there with a bid. 62% of that level, not bad. You might be able to take a shot at the long right here. I mean, we could send them. We could send them right here. It's high risk trading, no doubt about it. $5 a point. Let's go ahead and send them. It's not bad trade location. It's not bad trade location at all. The question is what happens to our trade, what happens to the price action right this minute? We're taking heat. So let's say I just took that trade and I took it at 38%. We bought in at 42,488. I'm looking for price to stall out at this level and then rally. You can see why. I mean, we're at extremely high. This is high risk. No question about it. So right there, we came down. We tested out our zone. We got the quick scalp. We got the bounce back up to 527, which was absolutely beautiful, about 27 points. We should have already got this money. Right now, it's going against us. So if, in fact, I was going to hold this trade, 4 lots, I'm down about $350. If I was going to hold this trade, I've got to have a finite stop out point. And right now, I don't particularly like it. I think that it's not the best stop out point, but I probably would have to just go to that 50% level of our current wave and stop myself out somewhere right in there at 41. Now, is that the best way to spend probably, $800? No, it's not the best way to spend that. The best way would have been to go in right on your line or maybe two ticks above that and get the quick bounce. And that way you have an opportunity maybe to win. But if you were going to do this, okay, 441, and we bought in at 42.93. So you can see what we're going to need. We're going to need about 52 points. That means we're going to have to trade somewhere up into here for at least an intraday 1-to-1. And right now it looks to me like we're just getting eaten alive. And you can see that's an expensive habit. Scalping's a game of inches, guys. Intraday scalping, that right there, you went from being a very profitable trade to going along for the ride. And honestly, I've been wrapped up in trades like these, and it's absolutely terrible. You're sitting there and you've got your fingers crossed and you're hoping the price comes back in your favor. And I have to tell you, hopes for children and losers. I have very rarely had one of these come back to pay me off. That thing's going to lose. I could see that coming as pure as day. The real question is did you operate within a game plan? If you did, that's fine. Look, we're going to get swept out, no question. So if in fact you're going to get out of this, which you need to right here, this would be the last stand for this trade, and it's about a 95% chance you're going to get stopped out right now. So if it bounces off of 50% and rallies, you have a chance. Right here, pull the plug and get out. All right, you're out. You got to get out of that. So you just spent about $1,100 on an intraday trade. Is that a great trade? It's a horrible trade. It's no good. It's not exactly what we wanted. Remember, you got to get exactly what you wanted. It would have been a much better idea to wait for 62% or get our initial entry and hit that for about 20 points. That would have been great. This is terrible. That's trading. That's intraday scalping. It's hard. It can be very difficult. All right, let's go. Let's check in and see exactly what's happened with our NASDAQ trade. If, in fact, we've come off and hit our level. NASDAQ still has a long way to go. It's a much steeper bullish trend. In my opinion, I would much rather take that one than sort of that chop fest we just got messed up in. And then lastly, our U.S. oil. U.S. oil's down just a little bit, but this one showing some signs of life right around break even, just a few pips up with the spread. So be watching those. All right, everybody, I'm going to go ahead and sign off. Absolutely, Himu, you're welcome. Sort of ran long today, but that's okay. As far as what the scheduling is now, if in fact you're interested in watching more of these live streams, cruise on over to howtotrade.com. I have the live stream schedule up for when I'll be back, and we'll have the first one of those back on the 14th of this month. It's a little bit time for a little bit of a vacation, little vacation time, I think. Should be a lot of fun. Looking forward to getting a little bit of sun and maybe getting out of the snow and the cold for a few days. That's for sure. This has been a long winter up here, and it's not over yet. All right, guys, that's a wrap. The single biggest market driver there is going to be the Trump announcements. I didn't even cover the NFP. The NFP, basically, we're looking for jobs to come down on Friday. We're looking for jobs to come down, unemployment to stay the same at 4.1%. Just be ready for volatility. That's all you have to do. That's really is all you have to do. As far as how to trade that, if you make a lot of money right after that NFP release, be careful because you could easily get whipsaw action on the U.S. Open. We'll be back next month with NFP Live and also CPI Live, just as usual. All right, I want to thank everybody for joining me today. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.